Welcome to part 2 of this trading course. In the previous video, we pretty much talked about market structure in details. We were able to completely address what you need to do within the first few minutes of getting into any currency patience. Market structure. So market structure actually is the foundation on which every successful trading strategy is built. Then the market structure answers the question of what you need to do. Once you open up any currency pair chart, what do you need to do? First thing you need to do is what? Be able to identify the market structure. What is the market doing? Is the market trending? Is it ranging? By now, you already know from the previous video, there is the market conditions we are very much interested in. And that would be what? The ranging markets. This kind of market condition. Well, not this. This is a complicated market condition, sideways, a ranging market, not this. We want this. Or you can clearly see what the market brings in: lower highs and lower lows, lower highs and lower lows. And also, this market condition is one we are very much interested in. You can see clearly the market is printing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, clearly in an uptrend, and then clearly in a downtrend. So once you are able to identify the market structure, if the market is in an uptrend, we want to look out for what? Buy setups only. We want to look out to buy in an uptrend, and we want to look out to sell in a downtrend. So the market structure answers the question of what to look out for. What to look out for. If we're in an uptrend, we want to what? Look out to buy. If we're in a downtrend, we want to look out to what? To sell. And then the next question that comes to mind is where. Having answered the question of what to look out for, getting into any chart, the next question would be where. Where do we look to buy? Where do we look to sell from? It's not just enough to us understand the market structure, even though that's like the foundation of every strategy, every successful strategy. I would say that should be like the number one criteria would be what? Understand the market structure, because then that tells you what to look out for. If you're looking out to buy or you're looking out to sell in an uptrend, we are always looking to buy in an uptrend, and we're always looking to sell in a downtrend. I cannot overemphasize this enough. Hence the need I'm stressing on it. So the next question would be where do we buy from? Where do we sell from? Okay, yes, I've identified the trend. We're in an uptrend. The market is printing what? Higher highs and higher lows. I have been able to identify the trend. Where do I then buy from? Since I'm now looking for what? Buying opportunities only. Okay, yes, I've been able to identify the market structure. It's in a downtrend. The market is printing lower highs and lower lows. Where then do I sell from? Since I'm only not looking at for what? Selling opportunities. That takes us to the next aspect of this course. Where do I buy and sell from? Where do I buy and sell for? We want to buy and sell from what? Areas of potential trade opportunities. Areas of potential trade opportunities. For short, up to. So whenever I use the word up to in subsequent classes, you just know I'm referring to what? Areas of potential trade opportunities. Well, this is a word I came up with myself. So you probably might not hear any other trader out there in the world use this very word. except the person is a student of mine. So yeah, we want to buy and sell from what? Areas of potential trade opportunities, APTO for short. Where do I buy from? Where do I sell from? Areas of potential trade opportunities. Areas of potential trade opportunities, excuse me. How do we identify these areas? How do we identify what? APTO, areas of potential trade opportunities. Since we know what, these are the best areas to what? To buy in an uptrend and sell in a downtrend. These are the best areas to what? Take high probability trades. There are three scenarios that I will use to explain how to identify what? These areas of potential trade opportunities. And I'm going to talk about every one of these scenarios in details shortly. So three scenarios that I will use to explain how to what? Identify areas of potential trade opportunities. And these are higher lows and lower highs, Fibonacci reversal levels, broken support and resistances. Higher lows and lower highs. We'll quickly talk on that. Higher lows and lower highs. So just like we said from the previous video, when once you get into the chart, you want to identify the market structure. Is the market trending or it's ranging? We're very much interested in what? In a trending market, either the uptrending market or the downtrending market. So assuming we have identified the structure of the market and what we can clearly see the market what breaks above the previous high and forms what? A new high that is now higher than the previous high. And then the market comes and gives us what? A new low that is not as low as the previous low. A new low that is what? Higher than the previous low. And then the market goes back again to give us what? A new high. And then the market goes back to give us what? A new high, breaking the previous higher high. Comes and then gives us a new low that is higher than the previous low. Sometimes it can come and give us what? An equal low. Sometimes it can come and give us what? An equal low. But then, when once we can clearly what? Identify that the market is trending in an upward direction. Once we can clearly identify what? That the market is trending in an upward direction. We are only looking to buy from an uptrend because clearly the market is making what? Series of higher highs and higher lows. So yeah, having identified the structure of the market, and seeing the market what is making, seeing that price is making what higher highs and higher lows, you know for sure we are what in an uptrend, and we want to look out for what buy setups only whenever we're in an uptrend. So where do we look out for what the buying setups? Number one criteria says what higher lows. The best places to what to buy from would be what when once you have seen price what break above the previous high and forms a higher high, you don't buy from a higher high. You don't buy. It's not enough to say what price has broken above. So you don't say because what price has broken above this. You don't say because price has broken above the previous high and has formed a higher high. Yes, wow, the market is very bullish. Let's start buying. No, it's too risky to be buying from what? From a higher high. What then do we need to do? We simply wait for what? For a retracement, for a slight pullback. For a slight pullback. And then after the pullback, when the pullback has ended, as soon as the market turns back to the upside, that would be the best time to what? To buy. So it's best to what? Buy from what? From a higher low. From a higher low. Whenever you have identified that what? A previous, whenever you must have identified that what? Price has broken above a previous high, simply wait for what? For a pullback, for a retracement. And then you get in on what? On a buy, because that's the best time to what? Buy. So this would be the best time to buy. You're buying from what? From a higher low. When once you have identified again that the market has broken above what? A previous high, the market has broken above a previous high and has formed what? A new high that is higher than the previous high. You don't buy from there. It's too risky to buy from this place. So you don't just buy because what? You have identified that a previous higher high has been broken. No, you simply wait for what? For that pullback. For price to come and what? To come and form what? A low, higher low rather. So you're waiting for what? For price to come and form a higher low. Then this is the best time to get in on the buy. When once you have identified what? Price has broken above the previous higher high and has formed a new high, that's not the best time to buy. You then want to what? Wait for what? A pullback, a retracement for price to come and give you what? A higher low. So you are only looking to buy from what? Higher lows. So it's not just enough to what? Identify what? The structure of the market that is in an uptrend. It's not just enough to notice that what? Price has broken above the previous high. Because you wouldn't just want to jump in on a buy because what the previous high has been what? Broken. You then want to what? Wait for what? To buy at where? At lower, higher lows rather. So you only want to buy at where? Buy at higher lows. Buy at higher lows. And then when once you have identified So we are looking to buy at where? Higher lows, and then we are looking to sell at lower highs. Then we're looking to sell at lower highs. So once you identify what that the market is in a downtrend, and that the market keeps breaking previous lower lows, so once you've clearly identified the market is in a downtrend, and then the market is printing what? Series of lower highs and lower lows. So market makes series of lower highs and lower lows. You have identified what? Price has broken below what? The previous low and has formed what? A lower low. You cannot sell from a lower low. It's too risky to sell from a lower low. You want to do what? Wait for what? For a pullback. And then what? The best place to sell from would be what? At a lower high. So you always wait for what? For a pullback, having identified that what? Price has broken below the previous low and has formed a new lower low in a downtrend. You wait for what? A pullback for price to come and what? Form what? A lower high. And then the best time to sell would be what? At the lower high. So having identified again that what? The previous low has been broken and price has formed a lower low, you don't sell from a lower low. Not because you're in a downtrend. It's not enough to sell from a lower low. Just because you're in a downtrend is not enough to sell from a lower low. You want to wait for what? That pullback. For price to give you what? The pullback and then form what? A lower high. So you're always selling what? At the lower high. So whenever you've identified what? A previous lower low has been broken and price has formed a new lower low, you then wait for what? That pullback for price to form what? A lower high. Yeah. So you are what? You buy at higher lows, only buy at higher lows and sell lower highs. you're only looking to what? Get in on that buy trade at higher lows, and then you're looking to get in on the sell trade in line with the what? Market structure at where? At lower highs. Let's look up practical chart examples of this. So at this point, you can see what? You can see clearly what? Price is what? Is making what? Series of lower highs and lower lows. And once you can identify, so the arrows here are used to identify every places where the previous lower low has been broken. So we had the lower high here, we had the low here, we had price come, then give us what? A lower high. And then we had what? This lower low has been broken. Price gives us a new lower low. So take note, price gives us a new lower low. We had a lower high here. What price gives us a new lower low? Just because price has broken below what? The previous lower low and has given us a new lower low, you cannot sell from this point. You cannot be selling from a lower low. You then have to do what? Wait for that pullback. Then you can now sell from what? From a lower high. So because price has broken and has closed below the previous lower low, when once you have clearly identified what that the market is in a downtrend, pointing what? Lower highs and lower lows, you cannot sell from what? A lower low. You have to wait for that pullback. But this pullback, this would be the best time to sell. This would be the best time to sell. So then what? Price comes, then you can see what? And then starts dropping. So if you're selling from a lower high, you are selling from a safe point. Then price drops and breaks below what? The previous lower low. Boom. You cannot sell because price has broken below the previous lower low. No. Yes, we know we are looking out for what? Selling opportunities. But then this is what? A bad place to be selling from. You cannot be selling from a lower low. You then have to what? Do what? Wait for that pullback. For price to come and form what? The lower high, and then what? You sell. Price breaks below the previous lower low. You wait, you cannot sell. That's not the best time to sell. You wait for that pullback. When once price gives you what? The lower high, then you get in on the sell. So you are only looking to what? To sell at lower lows. You are only looking to sell at lower lows. So you get in on the sell here. Always wait for what? For a retracement. Slight, some form of retracement. Just any form of retracement. Always wait for any form of retracement. So now clearly we can see what? Price has broken below this low. And then price has given us what? A lower low. Do you know what? I cannot sell GBP AUD right now. I cannot sell GBP AUD right now. It's too risky to sell GBP AUD right now. So what do I need to do? I then need to wait for what? For some form of what? Pullback. So I then need to wait for what? Some form of pullback to give me what? A higher low. And then I can now get in on what? I can get in on that sell. Some form of pullback. And then I can get in what? I can look to sell. Let's get a typical buy scenario. So yeah. So at this point, price is giving us what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We can clearly see what? We are in an uptrend. When do we sell? Where do we look to sell from? We're looking to sell from what? Higher lows. But once you've identified the what? The previous high has been broken and price has given you a higher high, you then wait for what? You then wait for the pullback to get in on what? On the buy. So for an uptrend, we're only looking to buy. So you identify what? The break of the previous higher low, and then wait for what? A pullback for price to come and form what? The break of the previous higher high, rather. You identify the break of the previous higher high, and then you wait for the pullback for price to come and form what? A higher low, and then you sell. Again, you identify what? Break of the previous higher high, price forming a new higher high. You wait for what? The pullback, the retracement, for price to come and form what? The higher low, and then you do what? You buy. Again, you do what? You identify price breaking above a previous higher high and forming a new higher high. And then you wait for what? For that pullback to get in on what? To get in on the buy, rather. To get in on the buy. So you buy from. So you are only buying what? At higher lows, and then you're only selling what? You're only selling at lower highs. That's criteria number one. Where do we buy and sell from? How to identify what areas of potential trade opportunities. You have to know what, identify what lower highs. You want to sell from lower highs, and then you want to buy from lower lows. But then what comes to mind is what? How do you then know what? When the pullback has ended? Yes, right? How do you know when the pullback has ended? Well, we'll get into that by the next criteria. So the next criteria simply tells us what? Fibonacci reversal levels. Fibonacci reversal levels is the next criteria.